So welcome everybody. For anybody that doesn't know, Dirty River here. Thank you for coming. Tonight, Thursday night Q&A. I'm gonna kind of leave this one open to you guys what you want to do. Obviously we can, just keep going through charts. We can talk about some trades for all of you that worked or didn't work, or any trading questions you have, indicator questions, how to do certain types of trading, whatever it is. I'd love to answer it for you if I can. But then normally at the starts of these Q&As, sometimes I'll go through some trades that I took, which we can do that today if we want. But the market has been, not super friendly to people lately. Thanks, Crash. The market has been not super friendly to people lately. And a large part of that is because it's been overall pretty range bound. So if we zoom out, we'll get a less marked up chart. I don't know, maybe this one. Oh yeah, sorry, Zach, you're getting put on the spot. Less marked up chart. I've learned over my time in OOT that people love it when charts do this or when they do this. They hate it when they do this. Sideways is where people start to get really beat up. And so I was thinking, and I'll leave it up to all of you, talking about trading ranges. I know people see me talk about it in my tab all the time, but it's just an important fact that we as traders, you need to learn to trade ranges if you want to continue to last in the market. Before the last couple of years, the market spends a lot of time in ranges, and ranges are great. They let the market catch up if it's been pricing things in. They let the market catch up, and then out of ranges is where we get explosive moves. When we range a little bit, that's typically when we're going to get a move, whether we few days of consolidation with a breakup, week of consolidation with a big breakdown. We range a lot. So if people were into it, I was going to talk a little bit about range trading today. But if not, we can always just look at charts, answer your questions. So, if you want to say in the chat what you want to do, we will make it happen. Could you not hear me, Reb? Range trading. Okay, well, a few people said it, so that's what we're going to do. We're going to talk range trading. We're going to talk things that I want to look for to, say, is the market in a range? Actually, yeah, Kush, you want to talk Tesla? Real quick. Tesla is in like the best range ever. This thing is ready to explode. But we aren't going to talk Tesla today. But yeah, right here, man, if you are longing Tesla above like, I don't know, 244, you're psycho. If you are shorting Tesla anywhere down here by 236, you're psycho. This is the bottom of the range. You long down here, you short up here. But we'll do SPY today. Gonna talk SPY. It's what I trade. It's what a bunch of people trade. Yeah, Rev. Rev. I know, dude. We all short a bottom or long a top on occasion, but if you zoom out, that's what I always try to teach people. So range trading. And we're just going to spend, I'm just going to go over this quickly. This isn't going to be, some detailed, analysis of like the different types of volume and everything that we're seeing to kind of make us understand, what is going on in the range. We just want to be able to look at the charts. We just want to look at the charts, and be able to make our judgment call of, do I want to, be looking for breakout trades, or do I want to be looking for, range bound trades? And this is going to be on SPY. There's always going to be those oddball runners or the oddball dumpers, and so something like, today we had AMD. AMD does this, AMD is up 12 bucks or something from the lows yesterday. Meanwhile, we have QQQ, which, it put in a nice day, but as a whole, it was, it was up 2 bucks and then it was sideways for, over half of the day. And, a bunch of that move came in that pre-market. We got that nice push up, so by the time we opened, we're at basically 388. I guess we got a $3 move up, but it's nothing like this kind of explosive move. So we want to learn to identify that. And the easiest way to identify, are we in a trading range, is go to the daily. And what I tell people all the time is, a trading range can be, if you're on the daily, it can be 2 or 3 candles. If you're on the 5 minute, a trading range can be, 3 candles, or it can be 30 candles, as we see a lot of the time, that lunchtime chop that people always talk about. We can see a lot of sideways movement on SPY where it just settles down and goes completely sideways. And so what we want to do is look at the daily and say, are these candles getting bigger? Are they getting smaller? What are we seeing on the daily chart? And so when we see that, that's how we want to trade during the day. If that daily time frame is telling us that we are in a range, then when we are trading during the day, we want to make sure that we are treating it as range bound. And so that's what I always try to, you'll see me talk about it in my chart, or in my tab frequently, saying, hey, trading range activity. And so what I mean by that is, I'm going to look at the daily time frame. I'm going to say, hey, we have a lot of sideways movement here. Next thing I'm going to do, I'm going to pull up some of those quicker moving EMAs. 513 is great, 1334 is great on these longer time frames, and say, are we pointed up? Or are we kind of starting to get flattened here? We can see that these things were really going up, and we're kind of starting to flatten out. We're taking a little kink up, but much less dramatic up movement. And so we can say, okay, I'm going to start looking for a trading range. The next thing that I'm going to do is I'm going to look into the shorter time frames. And so I'm going to go back and I'm going to look at previous days, and so we can, we have today, but we have yesterday. One nice big trending sell day. Next one we go to, trading range, very, very sideways movement. Next one we go to, nice buys and sales, but a trading range. We're hardly closing above where we opened. We go back, another nice trending day. And so then we go again here, trading range day. So 3 of the last 5 days have been trading ranges. So for me, I'm going to say to myself, hey, there's a pretty high likelihood that we are going to be in a trading range. So I'm going to come into today and I'm going to say, hey, I'm going to look for trading range activity. And what I mean by trading range activity is typically just very volatile reversals. And what those are is something like this, like we had today. Big push up, some sideways, some dump down to a big push up, and then a bunch of sideways. It is very obviously trading range activity. And so the last thing that I want to do, we've identified, hey, most of the days lately have been trading range activity. We have seen trading range activity on the daily. So what I want to do then is I want to come in here and I want to mark some of these recent highs. And then I want to, and we'll get rid of Zach saying the top is in $5 ago. I want to mark some of these lows, any of these major lows. And so right here, we have now identified our range. So if I go into those shorter time frames, I know that if we're up here in these upper parts, I want to be short. If we're down here, I likely want to be long. And that's how you want to treat all trading ranges, is you want to be long at the bottom and you want to be long at the bottom and you want to be short at the top. And so just do that by, identify, look at your daily chart. Okay, trading range activity. Go into those shorter time frames, look back and say, okay, a couple nice trend days, but a whole lot of sideways in here. And so that is when you want to tread lightly on trading. When you can start to look to enter some trades, and for not necessarily a long trade, a swing, anything like that, but if you're kind of looking for a counter trend trade, like, hey, we've been going up, you can say, the top of this range is likely where I want to get short because the risk is going to be minimal, maybe a dollar move against you. The reward is potentially all the way back to the bottom of the range. So you can be risking $1.50 to the upside, looking for over $4 to the downside. So that's how you want to treat all trading ranges. And it was like today we were getting up here, breaking above this 458, trying to get above this 458, and it was around here people started screaming, SPY's going to explode. And what we have seen, what I always tell people, go back and look at the daily chart. Well, what we have seen is that SPY actually does the opposite of explode when we're up here. So you want to assume this isn't going to break down or break out. And just treat all of it like a trading range. Keep it super simple, be short at the tops, long at the bottoms. And then when you're trading intraday, be prepared for choppy movement. So treat things as scalps. If you are buying dips and you get a bounce, sell it. If you are shorting rips and you get a drop, sell it. You don't want to, you don't want to ride trades through stuff like this. And so that's something that I explain to people all the time, trading range activity is not for holding. I don't remember what day this was. This might have been like Tuesday or something. People were getting smoked left and right. They'd be like, oh, I'm green. Oh, I wish I would have sold. Oh, I'm green. Oh, I wish I would have sold all day long. Wow, crash. All day long. This is what, people get torched trying to trade because everybody thinks a trend day like this is coming. And generally speaking, trend days like that, do not happen. So you always want to be prepared for trading range activity and trade it accordingly. And then, so the last part that I want to talk about is I was discussing how ranges can have, many different lengths. It can be one candle, it can be a couple of daily candles, or, maybe it's a couple of weekly candles, or on the 5-minute, maybe it's 25-minute candles. And so something that I'm always going to take note of is on these shorter time frames. Any ranges that form intraday. So we set a low here, and then we bounced up and we set a high here. For me, I'm going to be looking to short bounces up to here. This is one that works really nice where we take a bounce into an EMA. So obviously you can get short to the bottom of the range. And then if you're lucky, catch the nice breakdown candle. However, how I would feel more comfortable trading this is to look for the bounce back up to the bottom of the range and short it. Because we know most breakouts or breakdowns fail. That goes for breaking back into ranges. I will always take this short up here because we have that bounce back up to the bottom of the range. So, look for ranges everywhere. Something that I've been talking about with people in TradeFloor recently, there's a very fine line between a trading range and a bear flag or a bull flag. And so something like this, everybody is going to call this a bull flag because, we have a nice pull up, we have some consolidation back. For me, I'm looking at it as nothing more than a trading range that we've built. So I'm going to try to be long when we break outside of it. Likely for the, likely for the long on the breakout, maybe a buy stop waiting here or something like that. Targeting previous highs, of course, but maybe you get a better breakout. But always look for trading range activity and assume it is what's going to, kind of control the market for a little while, because the market spends a lot of time consolidating. So you either need to learn to step away from the computer when that is happening or learn to trade it. And so that's it. Quick spiel, 10 or 15 minutes on trading ranges. Let's see if we got any questions so far. Discuss the idea behind liquidity candles call. I know that you had a pretty you called one of those out today. I think you were screaming liquidity candle on this one, and we bought that dip. That one worked for us. Crash, I appreciate the selfie that you posted in there. Yeah, so managing your risk in a trading range. If we are, if we're trading in some sort of a trading range, and we are, oops, let's see. Give me 1 second. If we're trading in a trading range and we are trying to get short up here, I guess we can look at the shorter time frames. We are trying to get short up here. Our stop loss is above here. It is a very, very defined stop loss. And that's part of why I love trading ranges. We know exactly what our risk is if we are trying to get short in here. Same as down here. If we're trying to be long down here at the bottom of a range, it is very, very defined where our stop out will be. And so when I look at any of these, if I'm short up here, I know that my risk is $1.30. I also know that my likely final target is $4.50 below me. I think that's what it is. Maybe my math's wrong. $3.50 below me. And so I know exactly what my reward is. And so I love to take trades like that. Works exact same way at the bottom. I am risking $1.30 to potentially get that $4-ish move up. And so it's just a very, very defined risk reward for us. And it works the same intraday as well. So for the retest and the breakout, I'm assuming you're talking about right here because this is the one I talked about. This one, we break down. Here is the retest. So we know we want to be short as close to here as we can. And for me, a close back into here, and I'm not saying, let's see. I mean, let's pretend this candle closed up here. If we're closing 3 cents in the range, I'm going to give it a little bit of breathing room. I'm not going to stop out on a 3 cent close into a range. But any sort of strong candle, even longer time frame, maybe 15-minute candle can be your close, or you get a 15-minute candle close in here. That can be your stop out on the short in this gray box. I mean, that can be your stop out on the short. You also, something that I always teach people that they need to have is a protective stop. And that's if the trade is really, really going against you and you just need to get out. You need to know where that is in your mind. And for me, if I'm shorting any of these wicks up here into this range, my hard stop is likely going to be above this EMA up here. If we're looking like we're going to rip above an EMA, you likely want to be getting out of that trade. And not take on any more risk. Whereas when we're initially entering this, our planned risk is a very, 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 very small risk. This is just your emergency exit plan if you need to take it. Yeah, people always, I see it right in here. People always want to know, where do you put a stop loss? And that's why I preach entry. The two most important parts of a trade are entry and stop loss. Profit will come. Profit targets are easy to get. People are great at selling their contracts when they make a little bit of profit. But your entry is everything. And how I describe it to people is you can turn a good trade great, or you can make a bad trade stay just bad as opposed to horrible. So something that me and Flips all the time, you'll regularly hear say, don't buy the tops of candles or don't short the bottoms of candles. This is another prime example. If we're looking to short this, we want to short it as close to this range as we can, knowing that, maybe it's going to move 15, 20 cents against us. Well, the person who chases the red candle and they short it down here, their risk has now gone from 10 or 20 cents to 60 cents, 50 cents, something like that. So they have dramatically increased their risk. And they might stop out on this push up here. Whereas the person who enters up here can ride through this if they want, or the person who enters up here can be trimming where the other person shorted. So now your entry turns a pretty good trade into a great trade. You get this whole dollar move down. The person who entered here only ends up getting the 30-cent move down. So entry is everything, and it dictates stop loss and how wide the stop loss is. Which trading platform? This is Thinkorswim. I definitely prefer it. What should the stop loss be that are contracts 1 or 2 week expiration? Well, if you're actually looking to swing trade things and or at least longer day trade things, you need to be off the 5 minute. You know, it's still all risk tolerance. Like on something, if we zoom out, we'll stay on the 5 minute, but if you are getting short up here because we're at the top of the range and you want to buy a little bit of time, so that hopefully if it does bounce a little bit, you aren't going to be destroyed as if you were to swing a same day or something like that. Your stop is still going to be the same, but you aren't going to stop out on like a 5 minute candle close like a scalper might up here. You're going to be more watching that daily close or the hourly close or things like that. Long day trades and swing trades, you don't want to stop out based on one 5 minute candle. Swing traders do it all the time. I see, Zabes deals with it all the time. He alerts a swing trade and 20 minutes later somebody's like, oh, this bull flag or this bear flag on the 3 minute chart doesn't look good. And to Zabes, that means nothing because he's looking at the 30-minute chart or whatever it is. So he doesn't care about your 3 minute bull or bear flag. He only cares about those longer time frames. So that's why you base your stops on something more substantial than just a 5 minute candle. Doesn't that seem to be like a long stop loss? I don't know what you're talking about. Oh, probably this one right here. You were talking about the emergency stop loss. Well, yeah. I mean, but if this trade is suddenly flying against you, that's not the plan. But you need to be conscious of that type of thing happening because if you don't, you'll blow your port and you'll start holding trades and be like, oh, well, maybe it's going to break back under there while it's flying away from you. So you always need to have a stop up here that's like, it's the protective stop. That's what all big time traders do. You have to have a protective stop for if things go horrible. And so that's the worst case scenario. But the real stop, you're planning on a 5 or 10 cent move against you, which is likely going to be at most 10% of your contract. Oh yeah, 1 minute time frame for entries. Wouldn't be caught dead doing that myself. Oh wow, we got Colin in the house, dude, doing himself, doing what he likes to do. Yep, exactly. And that's the thing with stops is that you do have to be, you're going to lose money throughout all of this. That's just part of it. And the goal is to lose as little as little money as possible. However, you need to be prepared for things going wildly against you. Because it happens. It happens to everybody. There's really no way to avoid it. It's kind of just part of trading. And so sometimes you're going to get blown out of the water, but you don't want to be the person that ends up, holding the trade to minus 80%, praying that it comes back, because those people just never last long in here. We see it all the time of people like holding trades that are completely dead and then they come back to profit. And that's why I always say, when somebody tells me they're in a trade and they're down 80% and then it comes back and they get profit, I am I am I am happy for you that you made money, but that is absolutely horrible trading. That's it. Like, you won't last long. You will keep blowing ports. And there's just no way around it, unfortunately. If that's how you try to trade. The only thing, yeah, exactly, diamond hands. The only thing diamond hands has ever done for traders is blow up their ports. And so you want to be able to admit, and I think one of the most important things and important skills that most traders lack these days is they don't have the ability to admit they're wrong. Sometimes you have to stop out. Everybody stops out. Everybody, like I even said on Trade For yesterday, I stop out of a trade every single day. That's just part of trading. You do it. And everybody lets contracts go worthless. Even I still do it sometimes, but it's part of the plan when I do. But not, once you've done that enough times, you learn the lesson of like, okay, I don't want to do this anymore. Let's see. How do you know when it's a low volume day? So that's actually kind of a difficult question to answer. Over time, you will learn what is a high or low volume day on a stock. However, there are things that you can look at that until you really have an understanding of volume. Like I can look at SPY, and when we were a good ways into the day and we were at like 15 or 20 million volume, I was like, okay, well, this is not a huge volume day by any means. And so it's something you will learn over time. But the best thing that I can recommend, oh, what's up, Flips? How we doing? The best thing that I can recommend is getting a volume indicator. Whether it's the one I have pinned in my tab or the ones I have pinned in my tab. Toasty's got some pinned. I know Flips has some that I think he recommends. Just start watching volume and you will learn. And so what I do up here, this is my daily volume. I like to just watch it and see, what, what's the volume doing? Is it moving fast? Is it moving slow? What is it? And trade based around that and understand if volume is kind of lagging, you aren't going to get huge moves. You're going to get some moves, but they aren't going to be giant. And so that's one way to watch it. And then the next thing you can do is just kind of go to the daily. And down here, all brokers have this, at least I hope Webull does. You want to see what do the bars look like? These are all the volume bars down here. And so you can just look at them and say, like, if we're halfway through the day and these bars aren't very big, in the grand scheme of things, then you can start to say, hey, this is kind of looking like a low volume situation, and just prepare for that. And then, don't get me wrong, you've had me and Tilio just beating the drum, just screaming from the tops of the mountains for a week now. Hey, we're likely going to be in a range. We are in a range. Treat it like a trading range. Wait for data. And so part of that is, we're going to have low volume. And if tomorrow this data moves us like we should, we will very likely have a high volume day today. But the easiest way to learn volume is to sit and watch it. And so something that I do, I actually typically when I run these, I turned it off for this. Typically when I run these, I'll actually run two different instances. So maybe the 5-minute and the daily. And so if I'm trading something, we can pull up BS because people are likely trading it right now. If I'm in a trade, like right now, say I'm long on futures, I want to see this buyer volume staying higher than the seller volume on shorter time frame. And then if I'm buying dips, or selling rips, I want to make sure that if I'm buying dips, the buyer volume is higher on the day than the seller volume. Or if I'm shorting rips, I want to make sure the seller volume is higher, just to know, who is winning the day overall based on the volume. Give me 1 second. I was going to unmute Flips just in case you wanted to say hello. You can talk if you want or not, Flips, whatever. But hello. Yeah, Rev, I love that. I love that mindset too. And that's something that I like to tell people, if you're seeing increasing volume, increasing buyer volume, look to get long. I heard somebody actually today in voice chat, it made me super sad. I heard somebody getting Tesla calls, sniped them, like some are right down here. And then this starts ripping, and I am literally watching the volume on Tesla pour in long. And then right around here, people start screaming at him, sell it, sell it, sell it, sell it. If they knew anything about volume, they could have just looked at any of these volume indicators and seen there is not a seller in sight. Stay long on Tesla. And it wasn't up here until this, 244 area or whatever, 244.50 area that sellers started showing up. But it was something that I'm happy you brought up volume, because this was a very prime example of it today. Even if you don't understand volume, you're in Tesla calls right here. You see the volume is increasing and there's more buyers than there was the candle before. hold it. That next one pushes up. I mean, don't get me wrong, you should be trimming on $4 rips, you know, but the next one pushes up, solid buyers. Why are you going to sell that? Nobody else is. Then right here, you get a nice solid push up. And then we can see on this volume candle, I'll put some dots on it. This volume candle right here happens to line up with this candle up here. And so when that candle closes, we can say, yes, that's a green candle. There was more, there was, you know, double the sellers that there was buyers on that candle. Now is a really good time to sell your Tesla runners, because we can tell just from this candle, sellers are showing up. Do we know that it's instantly going to be a $2 down candle? Of course not. But we can look at the volume, match up the candle, and say, okay, buyers just smoked every bear in sight, and suddenly bears won. I should set a stop, or, you know, even if it's just a stop at the low of this candle, so you avoid holding that, you know, but always use volume in your favor and just watch it if you can. Hopefully, I see another question. I can see detail on volume size just seeing the chart bars. Well, hopefully I just kind of explained what you want to be looking for. And then I use the volume up here, super visual number. It tells you, are buyers winning or are sellers winning, you know? And so that's what I love to watch, you know? We saw it here on ES. There was only buyers. So, and buyers are winning. So of course they're going to push it up here. You know, that's how you like to do it. Do you need level 2 to see volume details? Yes and no. If you understand level 2, it can be a super powerful tool. If you um if you are, hold on one second. If you are
There you go.
nice to the work, there we go, Flips. If you understand what level 2 is saying to you, then awesome, you can use it. And it can be a super, super powerful tool. However, do you need it? Not necessarily. You know, what level 2 is telling you is orders on the book. These orders that we're seeing right here, you know, we got 50 orders on the ask side, 30 on the bid side. We can see ask higher than bid. Chances are we're going down. You know, we can see that here. However, these orders aren't filled. These are just orders on the book. The orders that are filled are time and sales. And so, sure, it's another really, really great tool to see, you know, like how the volume is shifting in front of you. And, you know, maybe look for big blocks of trades coming in. It is important to remember that red does not necessarily mean selling. It means sold on the downtick, or, you know, or a transaction made while the market was going down. This means transaction made while market is going up. But if we start to see some green, maybe we see a little bit of bounce. However, when it's the day, this thing's moving at warp speed. And you really need to know what you are looking at. Because you can get faked out. You know, everybody loves the level 2 matchup. But if they don't understand that these orders won't necessarily be filled, and they aren't trying to match some of these fills up here, you know, like we got a lot of bidding at 586.50, but 586.75 is the last things that have been filled. We can see it right here. So it is easy to get psyched out by these if you don't know what you're looking at.
Yeah,
Somebody's
so
asking about
true.
the volume indicator. I have this one pinned in my tab and this one pinned in my tab. Yeah, there you go. I'm happy somebody held those Tesla along, because man, I heard it, you know, it was my guy Raymond. Love that guy. Ramses, the OG bird call. Dude, he sniped this entry, and it was a beautiful entry. And I loved it because it was such a Flips entry. He had talked about a level to Flips had talked about a level to watch. And so I don't know if he's in here, but if he is, dude, shout out to Ramses. That guy's the goat. Uh uh he had this epic entry here or here, wherever it was. He heard the level Flip said. He said, if this thing pushes and pulls back, get into it. He followed the trade plan perfectly. He unfortunately had, other people yelling in his ear, sell it, sell it, sell it, sell it. He had the perfect trade plan. He just got, he had the unfortunate, what can sometimes be the unfortunate side effect of people who don't exactly know what they're talking about in voice chat yelling at him to sell this trade when he was catching the sniper entry breakout trade. I was super proud of him. That guy's been around a long time, and it was epic to see him hit one. So it made me sad that he got psyched out a little bit before he saw the maximum benefit of it.
What did he get out at? What was the percentage he got out at?
30, 20.
30.
They did 175.
Oh God.
Like, he was out here. No kidding. Like, no joke. He was out here. He entered somewhere around here. He was getting sell it, sell it, sell it, sell it, sell it. And he sold it. And like, I mean, at least take it to this wick, or, take it to the opening price, or try to take it to this wick. If you're planning a trade, and his entry was so beautiful, it was just the unfortunate, he got psyched out by the crowd, which happens to everybody. But it was something that, like, honestly, you didn't need a level. You didn't need anything on your chart. It was basically like watching this volume. We're having a sell-off come on reducing volume. Volume picks up, get in the trade and ride the trade. And he did. Yeah, shout out to Ramses. That guy killed it on that trade. No, even if he didn't hold to the full potential, it was an epic one.
I mean, the hardest part is actually getting on the right timing on the trade.
Yeah. And
that's the hardest time.
Yeah. His timing was so money. Like, and it was just cool because, like, I listen to you a lot, Flips, and everybody in here listens to Flips a lot. And it was so cool to watch somebody take the trade exactly how Flips would have taken the trade if he was there. Like, just seeing people learning, that is the highlight. And when it's somebody that spends a lot of time in VC, has been putting in effort to learn, and then they do it exactly how they're supposed to do it, that was just that was a cool trade. That was a cool trade. What is my trading strategy? I don't know. I covered all my lectures, man. Some EMAs, support, resistance, trends, volume. I keep it simple. One of the only unique things, if you want to call it that I use is the opening range, and it's just a statistical thing. That's all it is. Not necessary, but it's just something that I like to use. But for me, support, resistance, trends, volume. That's what the market moves on, so that's all I care about. Yeah, trades a modified ICT, wouldn't be caught dead. Yeah, and Flips is the GOAT because he will do so good, and he trades volume amazingly. He is so good at watching level twos, looking for flow coming in on cheddar flow or whatever it is, and then seeing that volume tick up. Like, we hear it all the time. Hey, okay, we're in. Oh, there's 200% of the previous buyer volume of the candle of the previous volume candle. And so you have a 200% increase in buyer volume, like this one was right here, this transition. This is likely a 200% increase in buyer volume. Flips was buying Tesla right here. Whether he did or not, I don't know. But this was such a prime example of a Flips trade where it's like, guaranteed there was money flowing into Tesla. He would have seen it. He would have said, hey, there's the volume. And there we go,
Yeah, his entry is. I'm watching the chart right now. His entry was money.
This is money.
That's money. Watching it. Yeah, volume slowed down. However, it increased some volume on buyer side. That's yeah.
It's perfect. And then even if we take these other EMAs off and we just put the 9 EMA, this is the 9 EMA. Now, I had 5 and 13 before. This is the 9 EMA. And like, look at this reducing volume sell off on a breakout into the 9 EMA. This is classic. You buy that. Like, you buy that every time.
That's just him learning. Next trade for him will be setting up levels. Setting up levels, and that way he can take it from level to level.
Yep. And he's getting there. And then you hit him. I think you hit him down here. So this was even, I mean, it was like even a re-entry for him, which I think was, sick, dude. Good for him. That was such a good trade. And I just love to see those people learning, you know, that's what we're here for, you know, like, don't get me wrong, Flips, like, you know, hands out the epic trades all day, every day. He's even been more generous on making it pretty clear what he's entering, you know. And so it's really cool to see somebody, at least, you know, for me, I'm sure for him too, to see somebody like do it on their own exactly how we would have done it. That always feels good, you know. I love getting charts from people that I've worked with of like, hey, look at what I did, you know, this is what you taught me, and then I went and did it myself. And I, you know, I always tell people, if you are the ones out there and you're learning and you're putting in the effort, and you know, we all have to learn. We're lucky we got analysts here that are good traders and we have people to follow and things like that. But as you like learn and you start to do the hard work, you know, me and Flips or Toasty or whoever, we can teach you as much as we want. You're the one putting in the work. When you do it right and you do it on your own, you know, don't forget to pat yourself on the back. Like this, what we do is, you know, really, really simple, but really, really hard to do those simple things right sometimes. So, you know, I love seeing people learn. I love, you know, I get a lot of DMs every day, and a lot of them is just people saying, like, look at this, like, would you have taken this trade? And I love it when I see a trade and I'm like, yes, you know, I absolutely would have taken that trade. And then I jokingly say, DM me next time. I want that trade, you know? Okay. Oh, wow. Yeah. Call's brother got hard in here too. Oh, nice big LLC. I don't know who that is, but sick job, you know, dude. I mean, great and great entries, plenty of things to be had. You know, even this nice short out this trend, which I didn't catch, but I know some people caught that one. I mean, a lot of great trades to be had on Tesla today. And so it's sick, you know, it's sick. It's been a fun week to trade. Big data tomorrow. Hopefully it gets the market ripping, you know, that range that we were talking about that we have been in on SPY. I am very, very hopeful personally that we either see up here or we see down here tomorrow. I don't care which, but I would love to finally see the break in one direction come. You know, I don't know. I don't know, nor do I care which way it comes. I kind of position for either side. I just want to see us get a ripper in one direction. I don't care which though. Nice, I appreciate that. I'm happy I can teach. I'm happy we got Flips teaching in voice chat every single day. You know, a lot of people don't realize that most of what he does in there is just teaching, you know. Of course he gives out awesome plays and things like that, but he's in there teaching you exactly what he does every single day, you know. So we're real lucky to have him. Did you hit anything else today, Flips? Are you still here?
Yeah, my trades was AMD at open, which
Oh,
was
yeah, I
heavy.
definitely knew that.
That
Jesus.
was strictly on consolidation volume, and I explained that trade on the 4 hour, how we looked at the trade in the 4 hour. If you want to go through it, but yeah, you can see. Oh yeah, pretty much. And then there was the breakout, and then the retest. The retest happened through the pre-market.
And honestly, this was probably even a better thing to
That
watch.
was there. It is. That's where it is. Yep.
Yeah, I bet you were
So
watching.
that retest happened through pre-market.
Yeah.
Um, and then it just touched pre-market high. Then that's, if you know, yeah, there you go. Retest on pre-market. Then I shifted to the 30-minute, and I looked at it on the 30-minute and look at that consolidation just ripping. And
The
there's that. Yep, there you go.
breakdown, breakup, and then gives you the retest. And
It gives me that retest. Yep.
this one's perfect too. And I mean, of course, nobody knows that this thing's gonna rip $10 for you, you know. But
Yep.
your risk on this trade was like what, 50 cents down?
That's
60
50.
cents?
Yeah, 50 cent on the downside for a $2.50 move on the upside.
Yeah, like no, yeah, and even just like looking at my levels, you enter it here, you're risking 50 cents down for 80 cents up. Next one, you're up a buck 40, and then over $2 there, you're good to go. $2.20.
Yeah, I
And
remember
then
that the last contract I sold, I think it was like 79 to like 240. And the last, when I looked at it like 30 minutes later, that freaking thing was like a 510.
yeah, it was
Oh.
insane. I mean, dude, that was insane. And
But
I'm so
that's
happy
that
you caught
trade.
that. Ooh,
That trade came in the 4 hour time frame.
yeah. And that's a beauty. Yeah,
Yeah.
that's a beauty. And even just seeing like we had this volume consolidation, and then yesterday, all of a sudden,
Yep.
we had higher volume, you know? So we could kind of say, is AMD about to do some? Of course, no way to predict such a thing. I mean, coming off the back of an event, you know, maybe this could But wow, what a runner.
Yeah.
What a runner. So
So that was the trade of the day. So I hit AMD at open. Then we hit some AMD again on the second re-entry. Those are like $69, and those ran those 123s. I think they were. They
wow.
ran money. We hit. I don't know what else we hit. I put in my tab. We hit some SPY or some XPX. Some XPX calls. They were like $65, and I sold the last one for 175. And Empanada was watching it, and they ran to like 240
Wow.
after that. So it was nice. It was a good little day. And then at
Yeah.
the end of the day, like 15 minutes later, 15 minutes into the market close, we hit a XPX calls $15 to 165.
Dude, I hit a ripper on some 45.85s. That's
uh,
what I did. Dude, I hit them
uh,
like 1 minute to close, 20 to 80 or something like that. It
yeah,
was
that was fun.
25 to 80. Yeah, it was a good one. That was a good one. And today I actually hit some 85 puts also real quick for a little bit, 20 to 50 or
Nice.
something like that. Yeah. So yeah, and I love that, I mean, just a lot of people ask me, and I'm gonna get off SPX so we don't like necessarily encourage people to trade that. But
Yeah.
so going into close, oh no, going into close yesterday. I talked to some people trading, and they they love the last, sketchy 5 minute scalps, and I love them too. But so something that I look for when I'm doing these end of day scalps, I get asked about my scalps a lot. Something that I'm do when I'm trading these, I look where we're trading. And so yesterday we were trading at 454.60 or whatever going into close. The 454 puts need a huge move to pay. The 455 put or calls need a huge move to pay. So this is a day where I won't trade SPY into close because we aren't that close to any of the strikes. So yesterday, end of day, I said, I wanted some end of day scalps. So I went to QQQ. You can see we are trading 385 into close, on that last candle. You can take advantage of being in the money and getting that intrinsic value pop, or you can short below it. And so yesterday into close, that was what I did. I hit some 385 calls, somewhere down here, 384.90, just 10 cents away, easy pop. And then they pay you really nice. And you can only do that when you're trading around the strike. Of course, you can get a big old ripper that pays the out of the money one really well. But if you can be 10 cents out of the money and risk that bounce, that is when I like to take those high risk trades, and of course they can go to zero super, super quickly. But I am always going to say, are we trading close to a strike? And that is how I'm going to decide what I want to scalp into end of day. And if you can be right at the money, like I don't even remember what the 385s were going for yesterday, but I think I bought them $11. I think they dropped to $9, and I think I sold my final runner at 21 or something like that. So they aren't, SPY's not going to be some crazy huge gainer, but it's going to pay you 100% on a 15-cent move on those same days into close. So they can be a really, really fun thing. SPX, of course, the same, just at a higher price sort of deal, and you need that move to come real quick. SPY, you got that little bit of leeway. QQQ got a little bit of leeway, not to mention you had the 15 minutes after close working for you as well. So you can actually sell those after SPX. Well, if you same day SPX, you can't trade after the close of the New York session. Ooh, Google, yeah, man, Rab, I wanted to hit that one. I was gonna hit it out of spite because Toasty made some smart comment yesterday about how how Google was the weakest looking big tech that there was or something. And I was like, you think this breakout is weak? And then I mean, don't get me wrong, I did not think Google was popping, that big. I didn't think Google was moving $8 or nothing. But I wanted to grab the Google calls out of spite, but I missed them, unfortunately. But I know you hit that one. They were even just right off the open. This thing went dumb. Such a nice smack there off that 135. Wow. Yeah, Henry, strike price matters so much, It happens all the time. Even like today, we go to today. Oh, we're on the 1 minute, gross. If we go to today, somewhere up here, I mentioned it in my tab even. Might have even been sooner. Might have even done them here. But I mentioned it in my tab that, you know, we had a little bit of a pattern setting up here that typically sets you up for a pretty nice scalp. And so I entered some puts and I talked about it on trade floor. Maybe we entered them here or something. For sure, saw a little bit of red, then ended up paying a nice little 30% off of it or something like that. But when I said that, you want to trade the closest strike, you know, when you're that close. And some other people decided to get in 456s. And so, you know, I was a little bearish as for a sell-off into close. I thought it was going to be bigger than 80 cents or whatever it was, you know. But when you're buying these contracts this late in the day, there's no reason to buy a 456 because we never even traded 456 today. So there's no point to be purchasing that strike. However, 457 we did trade and it was very, very reactive. And so when I entered them, I wanted that cheap downside bet. And so that's what I went for. I went for those 457s. And you know, for a scalp, that's all you're looking for. You aren't looking like we don't actually think SPY is going to dump to low of day in the last half hour of the day. Statistically speaking, that happens never. You know, I mean, 5% of the time you might get that kind of a mood, set a new low a day on a bull trend day in the last half hour of the day. That's just not something you want to bet on, you know. What time should you do next day contracts? That's completely up to you. You know, if you're trying to scalp, then you need to understand the risk this late in the day, you know, a couple hours in the day left. You need to understand the risk of those same days, and you need to size accordingly and understand that, you know, any little bounce against you is likely going to beat the contract up pretty much or pretty bad, but you need to have a slightly wider stop due to that volatility. So if, you know, normally you like to stop out of contracts for 20%, well, maybe size down so you can actually widen your stop to 50%, but be risking the same amount of money as if you were in normal position size, only risking 20%, and give those contracts a little bit of breathing room. However, end of day, I don't necessarily love trading the next day contracts. I like to take advantage of this volatility and what it can do to, you know, what it can do to a same day contract. A next day contract, you know, on this move, you're going to make $10 or $15, which might only be 8%, you know, something like that. On a same day contract, this 40-cent move could pay you 100%. So I like to take that, you know, I like to take advantage of that risk. But if you aren't comfortable with that volatility, start trading, you know, next day contracts around, you know, noon or whatever, you know, midday, switch to them so that you can feel a bit more comfortable with some of that end of day volatility. I don't know if Flips is still in here, but I can kind of answer it for him. I think it completely depends on the trade. You know, if you're buying a pullback to a 9 EMA,
Here, what happened?
somebody was asking if you wait for a candle close, and I said it likely depends on the trade. If you're buying if you're buying an EMA pullback, smack it. You know, when you hit that EMA, at least that's how I treat it. But if I'm looking for a level break, I typically want to buy the retest more than I want to buy that first candle breakthrough.
Correct. And the best is when you have an EMA right on your level.
Yeah, like here's an example. And I know we just have this one random level on here, but break it, pull back to the EMA at the level. This is a nice one to try to buy. You know, you have a strong candle, buy that pullback, stop below it, get the bounce, right?
Yeah, exactly.
That's the type of thing I look for all the time.
That's what we did on the people that were asking me on the re-entry and AMD today. It was pre-market high. If you draw your lines and you can see pre-market high.
Where is the pre-market high?
Right there.
Oh my God.
Yep, there you go.
It was just the bottom tick, of course.
Yep, it was the bottom tick, and then when you look at volume, I have a little different volume algo than River has, but it's pretty much the same shit. And all I saw was, and you have to learn how to read it, was timing sales was straight up buyers, and they were just sitting. I think it was like I was trying to add as much contract as I possibly can add, and I think it was like 1.8, 1.9 sitting at pre-market high. And immediately that whole gap of buyers got erased, meaning they all got filled at the same time. So that was an introduction for me to say, "Get, we're gonna get in this shit," and we all got in, and there you go. That's the trade.
Yep. But then it just went to the boot for you.
Yeah.
Thanks, Flips. I appreciate you showing up. Okay, well, 6 o'clock. If anybody's got to get out of here for you, but if does that answer another couple questions? Yeah, thanks. Appreciate you. Yeah, Space Sunny, thank you. Okay, well, that is gonna do it. Thank everybody. Yeah, I really appreciate you. Yeah, thanks everybody. Thank you all. And make sure you tell Flips thank you. Love it when he shows up. He's just the goat. And if I went over anything too fast or you got any questions, always feel free to hit the DMs. But with that, I think we will call it a night. Thank you everyone so much for coming, and we will see you tomorrow, Friday. Be safe.